Hey guys, Mike here. So this is an unexpected video, but I wanted to go ahead and put it out there to you because I don't know how it's going to affect the markets tomorrow, but I can't believe it's actually going to help them. At least in the fintech sector, I expect those stocks to tank because Upstart is down around 14% as I record this. It's actually down farther than that. It got down to 26, but it's recovered slightly. And what is causing this is the fact they released preliminary unaudited Q2 2020 financial results, which aren't actually coming out until August 8th. All right, and what is tanking the stock is basically the revenue is expected to be approximately $228 million when they already guided down after the first quarter, saying it was going to be between 295 and 305 million. So that is a big miss. Their margin, they guided at 47%. It's down to 45%. Obviously, net income is going to be hurt because now they're going to have a loss of around 27 to 31 million. They guided for at most a $4 million loss. And so these are obviously not good. And I'll go ahead and read exactly what the CEO said right here. And he says, inflation and recession fears have driven interest rates up and put banks and capital markets on cautious footing. Our revenue was negatively impacted by two factors approximately equally. First, our marketplace is funding constrained, largely driven by concerns about the macroeconomy among lenders and capital market participants. Second, in Q2, we took action to convert loans on our balance sheet into cash, which, given the quickly increasing rate environment, negatively impacted our revenue. During the second quarter, we improved our unit economics and oriented ourselves towards continued positive cash flow, even at a lower loan origination volumes. That's the key, lower loan origination volumes. With a low fixed cost base, we expect to continue adding to our almost $800 million unrestricted cash balance, as well as to continue repurchasing Upstart shares as it makes sense. And finally, despite limiting hiring to critical areas, we continue to invest in our models and products or blah, blah, blah. So we know they're confident. And why this is a big deal, because you can see these stocks trade in tandem, okay? You can see at Upstart's last earnings, they absolutely tanked last earnings. Why? Because they got it down and every stock was getting killed during the last earnings. What happened when they gapped down? The next day, all the fintech stocks, and this is SoFi, Lending Club, PayPal, and Square, all went down with them. And then you saw Upstart recover. What the other stocks do, they recovered along with them. Then they all trade sideways together, going up and down, up and down. Then they all decline again together. Then they start trading up and down, and sideways. And so tomorrow, Upstart should open up probably somewhere in this neighborhood, I think. And so it makes sense that all the other fintech companies will go right along with them because that one phrase, lower origination volume, that has to hit SoFi for sure. All the rest of these people spending goes down. Y'all see PayPal, Square, all the rest of them go down as well. Lending Club. We'll have to see, of course, but they trade in tandem. And so I expect to see that. I don't know how it's going to affect the rest of the market. Who knows? And I'm telling you right now, this is a tactic. You're going to see this through more companies, right? Because it's a tactic you use now. Get the bad news out there, and why? Because if I get it out now, what's going on with the market? Well, the market's been moving up in the last few days, right? And so let's get out there when the market has a little momentum to it, take the hit now, and we got 30 days to try to go ahead and have this stock either trade sideways or recover. So when we do release the real news, most likely it's going to be almost exactly what they say it is, or maybe even a little better. You never know, and you don't know where the market's going to be at that time frame. And so that's what this is. Get it out there. Tell it. So I can tell my son, just tell me the truth. Even if it, don't mean you don't get in trouble, but you won't be in as much trouble if you tell me the truth. And so they're getting it out there right now, and I can guarantee you're going to see other companies doing the same. It's like when SoFi, I believe it was their earnings, got released that early that morning or maybe the day before, something accidentally, wink, wink. And so they took the brunt of it, right, going into after hours, and then the stock actually didn't do that bad when they reported earnings, kind of recovered some. So, that's where we're at. We'll see. I mean, but when it comes to banks and fintechs, at least, not looking good for this earnings season. So, we'll see. But just want to put that out to you. So tomorrow, if we do open red, this could be one of those reasons. So, and expect other companies to follow suit, I would imagine. Have a good night, guys. And by the way, if you get anything out of this, please hit that like and subscribe button for me. I really appreciate it. Think about sharing the video. As always, guys, thank you for all your support.